Okay, let's just dive right in. Sometimes a single week can completely signal a massive shift in an entire industry. And for fintech, well, we just had one of those weeks. We're talking about a moment where it really felt like the whole sector just leveled up.
And yeah, this quote, it just nails the feeling, right? This wasn't just one company making a single move. No. It was a whole series of really significant announcements that are all pointing in the exact same direction. It's a story about evolution, about ambition, and honestly, about the entire face of finance changing right before our eyes.
And really, that is the whole point of this. The disruptors, the scrappy outsiders who are challenging the old guard, well, they're becoming the new establishment. They're the ones building the core financial infrastructure of the future. They're not just, playing on the fringes anymore. They are literally aiming to become the system.
All right, so let's kick things off with our first big example, Robinhood. You know them, the company that basically brought stock trading to the masses. Well, now they're setting their sights way, way higher. They want to manage their users' entire financial lives. And boy, did they kick it off with a splashy announcement. So, get this, they hosted their launch event in an actual airport terminal. And of course, Twitter just went wild, with everyone thinking they were starting Robinhood Airlines or something, which is hilarious. But the real product? It was almost as ambitious. We're talking about a $695 premium credit card aiming squarely at the big dogs like Amex Platinum and Chase Sapphire Reserve. And it's the sheer scale of this offer that is just wow. We're talking 10% cash back on travel, 5% on dining, unlimited airport lounge access, and credits for basically everything from DoorDash to health wearables. Robinhood is out here claiming it adds up to over $3,000 in annual value. That is an incredibly aggressive move.
Which of course leads to the big question, right? How on earth can they afford this? Why would a brokerage company jump into the super cutthroat premium card market with an offer this generous? Well, it's not just about getting you to spend money. The real genius? Oh, it's hidden in the fine print.
And here it is. The core strategy is something called the capital funnel. See, all those juicy cashback rewards you earn, you can't just take them as a statement credit. Nope, they have to be redeemed directly into your Robinhood brokerage account. So think about it. The more you spend on the card, the more money automatically flows right back into their investing ecosystem. It's not just a credit card. It's a brilliant tool for gathering assets.
But the card is just one piece of this way, way bigger puzzle. At the same time, they also rolled out tools for family finances, trust accounts for higher net worth users, custodial accounts for kids, even automated tax strategy tools. The message couldn't be clearer. Robinhood doesn't want to be just your trading app anymore. They want to be your all-in-one financial hub, period.
Okay, next up. This one might seem a little technical on the surface, but stick with me because it is actually historic. While Robinhood was making all that noise, the crypto exchange Kraken was quietly achieving a milestone that the entire digital asset industry has been chasing for years. This is a massive deal for the legitimacy of crypto. Now, to really get why this matters so much, you gotta look at how things used to work. The old way crypto companies accessed the US dollar system was messy. They couldn't connect directly to the source, so they had to rely on this small handful of crypto-friendly partner banks. And that created all sorts of problems: slower settlements, higher costs, and this is the big one, huge risk. We all saw what happened in 2023 when those banks started to collapse. All of a sudden, crypto firms were just cut off from their banking.
So what Kraken just did is basically make the leap from the before picture to the after. Their banking subsidiary has now officially received a Federal Reserve master account. What does that mean? It means instead of having to go through some third-party bank, they can plug directly into the Fed's core payment system, FedWire. That's the system banks use to move trillions of dollars. This is a fundamental shift from being a dependent outsider to a direct participant.
Look, the technical benefits are obviously huge. It's faster, it's more stable, you're not relying on middlemen. But the symbolic value? That's even bigger. For years and years, crypto has been the kid with its nose pressed against the glass, looking in from the outside of the traditional financial system. And now, one of its own just got a seat at the head table.
All right, for our final piece of this puzzle, let's talk about a company that you might not hear about as much, but is an absolute global force. While Robinhood is getting all the headlines here in the US, Webull has been quietly, methodically building one of the largest trading platforms in the entire world.
So what's the difference? Well, think of it like this. If Robinhood is for the absolute beginner investor with its super simple interface, Webull has always gone after the more active, prosumer trader. They offer much deeper analytics, more advanced charting, all the features that really serious traders demand. And because of that, they've built this incredibly loyal user base. And their business model? It is a classic flywheel. It's beautiful. They aggressively go into new markets, Asia, Europe, Latin America, places where the demand for digital brokerage is just exploding. That brings in more users, right? Which increases trading volume. That, in turn, generates more revenue from things like margin lending. And what do they do with that revenue? They plow it right back into expanding even further. And the wheel just keeps spinning, faster and faster.
And look, the proof is in the pudding. Webull just posted record results in its first year as a public company. It's such a powerful reminder that even though the whole meme stock frenzy might have cooled off here in the US, the global appetite for retail investing, it is stronger than ever.
Okay, so we've looked at 3 different companies, all making 3 very different but very significant moves. Let's stack it all up and really figure out what this bigger picture is telling us about the future of finance.
When you put it all together, the trend is just so clear. You've got Robinhood, evolving from a simple trading app into a complete financial ecosystem. You've got Kraken, plugging crypto directly into the core plumbing of the US financial system. And you have Webull, proving that this digital brokerage model can be scaled into a global powerhouse. Every single one of these moves shows a different side of the exact same trend, maturation.
So here's the big takeaway. The future of money, it's not being built in stuffy old bank branches. It's being built in the apps on your phone. These companies aren't just disrupting anymore. That's old news. They are now building the foundational layers for the next generation of financial services. The innovation that started on our phones, it's becoming the new institution.
And that really leaves us with one last big question to chew on. If these scrappy fintech disruptors are actually building the new financial infrastructure, what and who gets left behind in the old one?